Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, the last week of December, the last week of the year. So this is going to be the last weekly recap of this year, 2023, which has been a lot of fun, honestly, because we got our huge dip and then our huge recovery. And we have to really look from far away to see the context of what is happening. I will try to do that today for you to really see the perspective of certain moves and the perspective on what happened yesterday on Friday. I think people got super excited with the PC news, but I think you have to apply some psychology to really see the people is going on Christmas leave and there will be no volume and no clear price action. And that's why you have to take some decisions. But apart from that, this week is been again continuation to the upside. And the month is also finishing, so we are going to do the technical analysis from top to bottom, month, weekly, daily, and lower time frames to really see where are the imbalances, where is the volume, and where we are probably going to be heading for next year, or at least next week from 27th to the end of the year. And for sure, I will try to provide you with some insights to be prepared for next week. And one last thing, in this kind of videos, weekly recaps, I usually have a specific format, but if you want to see something of anything else, more of technical analysis, more of fundamental analysis, you want to see more of my trading, more of my strategy, whatever it is, please put that in the comments down below and I will try to incorporate that in the new format for 2024. Now let's start with the review for fundamental analysis. Monday, nothing burger, no news Monday, so we saw continuation to the upside. On Tuesday, we got the building permits and housing starts, and well, it was nothing of the same. The only thing that I would like to highlight is this huge 14.8 month over month on housing starts. That is pretty huge. And building permits is just chopping around. So I think the housing starts in terms of new house. I think all these businesses that work for building new houses are taking advantage of the huge demand that is coming, because in the second-hand market there's nothing moving due to the higher interest rate on the mortgages and people not willing to sell. So basically housing starts huge push, and then Bostic started to talk about certain things that we never talked before, and that is the kind of landing that we are going to see. Bostic Harker do that also on Wednesday, and that's why we sold off the way we did. That there's two options that I have to justify the Wednesday's sell-off. In terms of 30-year mortgage, there's nothing. We are continuing seeing lower 30-year mortgage rate. Consumer confidence got a huge boost, 110 from 101. That's a huge boost. We were expecting a little bit of increase, but this boost on consumer confidence is good and bad at the same time. Remember that consumer spending increases inflation, increases the probabilities of higher pricing, but at the same time supports the economy. So we are in that balance, equilibrium that we have to manage somehow. And we have to change to we have two options. So at 1 p.m., we got the 20-year bond auction. And look at this, from 4.7 to 4.2, there's a 5% on 5 basis points, 0.5 difference. And that's a huge decrease. That is huge decrease. And I think this was part of the reason why we sold off at around 2 p.m. And at that same time, Harker was saying that perhaps we cannot achieve the soft landing that everyone is waiting. perhaps the soft landing is not possible. Take a look at my Wednesday videos, because in my last Wednesday video, I provide a little more details on that, but I think that was a combination of the year bond auction and also the speech that Harker was doing on a schedule. So, and Thursday we got the GDP growth rate. Remember, higher growth is good for the market, but bad for the economy, because interest rates will have to be higher for longer. We were expecting 5.2. This is the quarter over quarter final. So it's a final reading. We finally got a revision lower, 4.9, but still a huge jump from the 2.1. So we are still going higher. In terms of prices, 3.3, not as big as the expectations, but huge jump from 1.7. So this is mixed sentiment. Initial jobless claims came, well, a little bit higher, but we were expecting more and more claims. And the same for continuing jobless claims. 1865, we were expecting 1888. In terms of the quarter over quarter prices for PCE, we got decent news. I think this is good news. 2% instead of the 2.3%. And for PCE prices, not core, general headline inflation, PCE quarter over quarter final 2.6, a little bit of an increase. We were expecting 2.8, so this is also good news. So Thursday, we started the recovery that everyone was watching for Friday. We were at the midpoint of the recovery from the huge sell-off from Wednesday. Thursday, we got a little bit of a push, but super choppy. And Friday, everyone was expecting the infamous V-shaped reversal, and that didn't happen. Despite the fact that we got, in my opinion, good news for, look at this. In terms of PCE, month over month, negative. We were expecting flat, the same as before, negative. This is a huge win. Year over year, 2.6. 2.9 the previous one, and 2.8 expected. Another win. Core PCE month over month 0.1, flat from the previous one, and 0.2 expected, so less than expected. And the core PCE year over year 3.2, lower than the previous one and lower than expected. So these are huge news, in my opinion. But because the PCE is the main reference that Fed uses to calculate and adjust inflation, and obviously the interest rates according to that. But the thing was that on Friday we were so bullish in pre-market that the potential to continue upside was denied. And sometimes we are so bullish that the higher potential trade is going to the downside to take shorts. You have to be careful on that kind of days, and that's why my only trade was in pre-market. I didn't touch the price action. I didn't like the volume, the price action, the movement on Fridays. So we are going now to start looking for technical analysis, and I will review that with you guys. So first, starting with the monthly chart on the NQ. Before moving that, let's just explain, because it looks like there's a lot of confusion with the futures contract and how the continuous chart works. So this is the NQ continuous chart, and as you can see, we are not at all-time highs. Why? Because down here we have a button called back adjusted, and if this is to adjust the contracts for each changes. So if we disable that, as you can see, we are now at all-time highs. We are now at all-time highs up here. But this is not adjusted to past price action and past prices. If we are looking to the NQ continuous chart, we have to set the back adjustment to really see how the current contract compares to the previous contracts that are now closed. So it's really important to see that, because if we are not at all-time highs, we are pretty near. Don't get me wrong, we are super near of, and I think we are going to crash it. But we need to see these kind of things to really look for more liquidity upside, to have a reference up here. So having said that, the monthly chart, it's super bullish. We got the monthly here fair value gap bearish from the start of the year on 2022. We got the huge sell-off, then the huge rip, 1 to 3 months of pullback, and then this is a clear bull flag. And let's not talk bull flags, ABCDs, and all that kind of retail stuff. Let's talk liquidity and ICT stuff. This is an imbalance that is being tapped into the 50 retracement, pretty neat setup. And now we are looking for the close of this candle and the liquidity up here. This is super bullish. So going back, this is the month of December. Going down to the daily, we took the liquidity here, we crashed it, and this is our week. This is Wednesday's sell-off, and this is the kind of Friday equilibrium that we got, inside candle of all these sell-off on Wednesday. So this is kind of tricky, but the interesting thing that I would like you to pay attention to is this fair value gap that we are into when we are not adjusting for, when we are back adjusting for the continuous contract. This fair value gap in which we are here, it's coming from 2022, all these consolidation up here that started the sell-off of 2022. So this is pretty clear, a pretty clear fair value gap here that we are right now into. So we can see that we tapped the liquidity and we started to tumble, and we are in this fair value gap. So this is looking bearish, right? We can all agree that we are at a critical stop in which we can see a little bit of retracement. But let's not forget about this liquidity up here, because if we check that, this is coming from this zone, and this zone on the daily, it's full of a lot of liquidity up here. I'm only marking the first one because that's the first target for me, but the main reason I have it there is just have a reference of how much we can move next week. Remember that we are on holidays and we got still this huge Wednesday sell-off. So let's go down again into the 4-hour. That sell-off was super huge, and we still have this 4-hour inverted fair value gap that we tried but failed. Look at these 8 hours on Friday. So 4-hour does not provide any more insight. The 1-hour starts to show a little bit of things. So let's now move to the NQ that I have the current contract chart on. So this is the sell-off. This is a 15-minute fair value gap that we are going to see. But the thing that I want you to notice is that we are doing higher lows into this liquidity up here. And remember that higher we have more liquidity. But the issue is that we are in the middle of the range, chopping around, and on the higher time frame, on the higher context, we have, remember that we have to check that on the continuous chart. We are in the middle of a daily fair value gap inverted bearish. So mixed sentiment, mixed analysis makes a lot of choppy price action. That's why we are doing these kind of things. Let's move into the 15-minute chart to see how I approached the Friday price action. This was Thursday, super choppy. We left let's clean a little bit. We left this liquidity here. Then we have the 15-minute fair value gap that now we can see. I'm not interested in these gaps down below because they are not on discount. We need a fair retracement, and this is the best one. There's no better one. This 15-minute inverted fair value gap was super magnet. 15-minute, as you can see, I have it charted. And on pre-market, we started to sell off a little bit. I have this bullish 15-minute from Thursday fair value gap that we kind of went into and spent most of the time during pre-market. So I was watching basically if we from outside we went back into the gap, and that's why we have to go into lower time frames to see the kind of move that we got. So we started doing these kind of things. I was not watching this, but once I entered at, I think it was around here, I started watching price action here. I noticed that we tried to do a manipulation move, we consolidating, but then we started going lower and lower and lower. So at my time, this was my time in which I was much active watching the London Open in here, super confused London Open. So we marked the low liquidity, we marked a series of these relative equal lows, and that's when into this move I took my only trade. My only trade was this manipulation move to the downside, taking this liquidity and getting most probably this candle, pretty bullish candle. So I just wanted to take a stab to see, okay, is this the liquidity that they want? I put, excuse me, I put my ratio 3.76, targeting the easiest liquidity for me. And I think this was a pretty good level. I didn't want to touch this. I just wanted to get some cushion on the day, and 3.76 and 20 points was pretty decent for me. That worked out not at the first time, but at the second time. So we started looking, I was continuing seeing this, so I had my trade, and I wanted to get my more confirmation of bullish fair value gaps being held. And this one was a pretty beautiful one. You could perfectly take a trade here or higher. Look at the price action, it started to looking good, and leaving 5-minute fair value gaps, 1-minute fair value gaps. This was beautiful also. And notice that I have this 5-minute gap here. Let's go to the 5-minute. I have a 5-minute fair value gap before moving into the big liquidity of Thursday. So into the open, into the number, into the PCE, I didn't want to take any trade. And this is why I didn't take this, but this was just plain manipulation. This pivot down here, they swept and they push. Big displacement, consolidation in here. You could perfectly take a trade here for this liquidity or even higher, the top of the inverted fair value gap 15-minute that I was talking about earlier. And look at this. So it's quite telling, right? We were so bullish that when we started, we were so bullish in here. Notice the acceleration to the upside, that when we opened, we just started to chop around, and this is not the price action you want to see, right? Because things like this can happen anytime. You can see rag pulls like this, and there were no news. It's just liquidity going off the market, people taking profits, people just saying, okay, it's Friday, I want my money to just go on holidays and enjoy with my family and buy some things. It's as simple as that. So you don't want to trade this. You want to trade these kind of setups going into the open. But people were so stubborn that this is the kind of price action that you get. This is not a day in which you want to trade. You want these setups. This is clear as day. I always tell you this. These are my setups. They are easy to find, easy to understand, and they are high probable trades. So why you want to trade this? You don't want, and you have to learn that. So having said that, remember, we are in the context of an inverted fair value gap here on the continuous chart. So things can get a little bit choppy. And also, we have some inefficiencies down here that I would basically like for them to start tagging. Look at the 1 hour chart. Look at the amount of liquidity. Let's clean up a little bit. Now that we covered everything, I can remove this. So look at this. It's clear that we have liquidity up here. So perhaps they want to do this kind of thing, but I'm bearish for next week. Look at the amount of liquidity that they didn't take on the way up. There's a lot of people in long positions and inefficiencies. This is not an inefficiency, but if we start moving lower, oh boy, this is a target for me. There's a lot of stuff down here. There are 1 hour fair value gaps open. There's liquidity and big wicks. This is a big one, by the way. This is a big one. So my strategy for next week is basically watching. Do we take this? Do we take this like this? If we do that, oh boy, I'm looking for shorts. If we continue higher, we have liquidity at up. It's not up here, it's in the continuous chart. We have liquidity at 400, almost 17,500. But watch how the market reacts on the 27th, on Wednesday, not on 26th. I'm not going to trade 26. I'm not going to trade perhaps on 27, but if people getting back from holidays with FOMO, we might see a lot of shenanigans going higher or lower, but I'm leaning lower because I want all these to be cleaned. There's a lot of inefficiencies out here. 1 hour fair value gap, 30 minutes daily, and market don't like. Market wants to be efficient, to deliver price the optimum way. And this is not a good way. So at some point, they are going to revisit this in order to continue higher or in order to continue lower. You don't know, but this is too much of liquidity down here, and we are starting to see these kind of things that if we see this, it doesn't matter if it takes this liquidity or not. If it takes this liquidity and does this, I'm super confident and more confident of going shorts. So this is the forecast for next week and for the end of the year. Notice that the Santa rally is real. It's yes. I mean, no one can deny that from November until here, we've been basically destroying shorts. But we are at a level at which shorting and market maker models to the downside might work. So let's now talk about individual tech stocks because they are also showing signs of wanted to go back a little bit. This is Apple. 3 days of red. They have news of the Apple Watches being restricted, being off the shops due to some internal things regarding patents. So Apple is looking weak, and we have a lot of FOMO into the 200 for all-time highs. But despite that FOMO, Apple is looking pretty weak up here. The 50 it's here, 50 moving average. Microsoft also wanted to go higher, but look at this. It never closed up here. We tried and we failed. We tried and we failed. And on Friday, we are there. Some retail may say, oh, this is a triangle, ascending triangle. I don't like that. Be careful with Microsoft also. Tesla. Tesla has its own catalyst also. It's not able to close up here. But we have this trend that we are starting to see some kind of push. So Tesla might break, and the next stop would be basically 270. But you know, Tesla is super volatile, and I don't know. I'm not confident. Amazon, this is the only one I see strong into the Christmas holidays. Big breakout. We have April 2022 liquidity up here. So Amazon being pushed up by consumer spending, it's really obvious. So I think Amazon can remain strong. Google is super strong after doing this kind of thing, reclaiming and having also liquidity up here. Nvidia, look at this. It's higher lows into the all-time highs. This is different, guys, than Apple. This looks way stronger than Apple into the all-time highs. This is not this. This is Nvidia is just a big setup of pressure into the all-time highs. Apple just did a squeeze and it's now trying to force its way into the all-time highs. This is not involving investors. This is just retail trying to catch the 200. Nvidia looks investment setup. And finally, Meta, super strong, breaking September 2021 levels. And I would like to show you something about Meta. If we take the measurement from in 2022 until 2023, Meta was down minus 66%. Everyone was saying Meta is gone, Meta is no longer valid. Well, from starting this year until yesterday, Meta is up 200%. 200%. This is crazy. And this is why you have to make your own decisions. Because if we see the volume, look at the volume at this dip. Look at the volume at this dip. These are earnings, bad earnings, red earnings. And look at what happened. Make your own decisions, guys. Don't let other people say you, oh, this is gone. Meta, I'm going to Apple, or because they are buying Meta. They were buying Meta. Look at this. 200% in 1 year is insane. Finally, a look into the dollar. Dollar is going to be super, super important if you want to trade the downside that I mentioned in the NQ. Dollar is at support level, at demand level. And I think if dollar starts seeing some strength, NQ is going to flash, basically. Because dollar strength means weaker stocks, weaker equities. And as I mentioned earlier, we are at a daily inverted fair value gap with a lot of chop up here. We have liquidity up here, but it's too far away. And on the 1 hour chart, we got this liquidity that we can just grab and start the market maker model to the sell side. So be really careful, because dollar looks that we bottom and we are starting, look at this, we are starting to put a little bit of bullish fair value gaps. So watch dollar and also watch small caps. Small caps are at a critical, huge level that we just took on Friday and retraced. We are up here. We went from all-time lows to year-to-date highs. Insane move on small caps. And look at the amount of inefficiencies we have. We have gaps. We have in fair value gaps, more fair value gaps, more gaps. Do you know what is this? This is called inefficient market. Small caps have been reaping to the upside, fueled by the fact that the Santa rally is going to happen on the tech side, but it really happened on the small cap side, on all the stocks and all the companies that went so oversold that people just jumped in. People are not jumping this heavily on the tech side, so be careful with NQ. Be careful with NQ, because we are at a level at which I'm starting to see some order flows, some ICT concepts, as you know, that I trade that are not applicable. And I have enough experience to say, be careful, guys. Be careful. So I think that's all. That's all from my side. We covered from the overall performance of the NQ, individual tech stocks, the dollar, watch the dollar, watch small caps, and just for now, we have everything available for us to trade next week. But your focus should be to study your trades, journal your trades, but most of everything, you have to enjoy the weekend. Disconnect from trading world. Enjoy your time in the Christmas Eve, Christmas Day. Enjoy the food, enjoy your family, your friends, and then Wednesday, not on Tuesday, on Wednesday, we can then be together with our batteries recharged and with all the experience from these days, we can be ready to trade the market on 27th. But for now, disconnect from everything. We have everything available for us to be prepared for next week, but disconnect, seriously. You cannot spend all these Christmas days thinking about the trading, because it won't work. Your brain, your mental health will suffer. So that's all from my side. As always, thank you for your time. If you think this video is useful, please give it a like, subscribe to my channel, because I put a lot of effort in these videos and these videos are for you. Please support the channel if you want to continue videos seeing videos like this one. I appreciate your time, all the videos that I put, all the views, all the subscribers. Thank you. This is time to say thank you. And I think that's all. Thank you for all the time. And this is the last weekly recap of the year. So enjoy it. And if you want to continue see me doing these videos, stay with me, because next year is going to be awesome. Next year is going to be awesome. I think we are going to see a lot of opportunities in 2024. These markets has changed. We are now more clear than ever, and I think this is a good opportunity to be on the market. So thank you, everyone. Remember discipline, risk management, patience, and you have to put the work and the effort to be successful in this world. So thank you for that. Stay safe, everyone. Enjoy your weekend. Enjoy your Christmas Eve and Christmas Day with your friends, family, loved ones, and see you on Wednesday.